Hi, this is Jack Crooks from Money and Markets TV. I keep thinking that any day now the Australian dollar will take a dirt nap. It took one back in mid-2008, falling a stunning 39% in just 3 months in the midst of the credit crunch. Global growth is fading fast again, and copper seems to be highlighting that story. It could be lights out for the Aussie again if that's the case. You can see in this chart that the copper futures weekly uptrend line is broken, and the primary trend is down. The yellow rectangular box shows what happened in the midst of the great credit crunch of 2008. As you may know, copper is considered a key industrial material. Its price movement is often used as an indicator of the direction in the growth of the global economy. And China is the world's largest consumer of copper. But the drop in copper prices has not come as a welcome development. The government's measure to curb inflation have limited China's firms' access to credit. Therefore, an increasing number of firms have been stockpiling the metal and using it as collateral. Such financing links the price of copper to other key elements of the Chinese economy, including the growing speculative real estate bubble. The falling price of copper means that the collateral initially put up for the loans in yuan is no longer worth what it once was, and that decreases the likelihood that the borrower will be able to pay back the loan. If firms default on debts, then others connected in the chain will default, and determining where loans have been invested is nearly impossible. Banks and state-owned enterprises are also potentially vulnerable since a high number of them have used copper as collateral. These firms are often involved in the real estate sector, and therefore they are exposed to the country's growing real estate bubble. The government would bail out the more politically favored ones if necessary, but that would leave fewer resources to be allocated to the private sector, which is crucially important to China's growth. It's all about feedback loops, and the Australian economy is highly dependent on China for its own growth. For a while now, I've been saying that Australia has effectively become a satellite country of China. Take a look at this chart, showing China's imports from Australia through September. Lower copper prices could put a real damper on Australia's growth. What's more, falling consumer demand from the Eurozone and the US is already in play. And if the bubble were to finally pop in China's real estate, it would be much uglier indeed. So we have the potential for real demand in copper and other commodities to decline sharply. Toss in the added thumping from the internal Chinese speculation, which would likely push the metal back towards its credit crunch low, and you get another 50% decline in the red metal. And guess which currency has been tightly correlated to the price of copper over the last few years? The Aussie dollar. There are two key takeaways from this chart of the Australia-US dollar versus copper. The first is a very large divergence between the two price series. And second, in the past, the series have been highly correlated. I suspect we'll see a big move one way or the other. It could be copper soars, but for now, I'm betting the Aussie tanks. I'm Jack Crooks from Money and Markets TV. Thanks for watching.